Okay, so just a quick announcement is that next week there won't be a weekly market analysis because we are having Traders Fest. Right, so this event has been planned for many months ahead and it's finally happening right on next Saturday, next Sunday. So I'll be busy, right? Coordinating and hosting the event itself. So if you have not registered for Traders Fest, I'll just put down the link below so you can attend this live trading event. So this is free. So since it's free, right, I would suggest just take this opportunity to learn from other successful traders around you, right? After all, it's a free event, and why not spend some time and to learn how other traders are actually succeeding in the different markets, right? We have stock traders, FX traders, swing traders, day traders, right? So yeah, so that's the quick announcement I want to share with you. Now back to this week's market analysis, right? The market that I'm actually paying attention to is actually none other than the 30-year treasury bond. Alright, so why this interests me? So let's look a little bit on the higher time frame. You see on the weekly time frame, you notice that this market has the tendency, right, to mean revert back towards the area between the 20-50 period moving average. So this red line here is the 20. I mean this red line here. The blue line is the 50 period moving average. I'm using the EMA in case you're wondering, but honestly, it's not going to make much of a difference if you use SMA or EMA, but my line on this chart is the EMA. So right now you notice that price is actually in this area of value, right? I don't trade off the weekly chart because the stop loss to use will be usually pretty large, right? Because the weekly, the range of the candles are much larger. So what I do is instead go down to a lower time frame, the daily. So this is where we look for a potential trading setup. Okay, so what I'm noticing right now here is that this is a very interesting level. Okay, so you can see that in fact this is a zone, right? Let me just highlight this whole area here is pretty much a zone, right? Where previous resistance, right? This is the previous resistance, price broke out of it, becomes support. Then price rallied higher, came back all the way back down to retest support, traded higher, came back down and retest support. So in fact, I think for those of you who are familiar with candlestick patterns, you notice there's this doji pattern or somewhat of a hammer, right? So I'm not sure if any of you trade this candlestick pattern, but for me, I don't usually trade them. So what I prefer to do is to go down even to a lower time frame just to fine tune my entry. So often, right, I get questions from traders who say, "Hey Rayner, why are you on this 1 hour time frame and you're trying to go long over here, right? Aren't you trading against this downtrend?" The answer is no, because I'm actually trading this trend on a daily time frame, right? I go down to the lower time frame is just to fine tune my entry, right? To get a better entry timing. So what I'm looking for over here is to show me that this market has the buyers in control, meaning that the sellers are unable to push price lower. Right, so you actually see a few things happening here already, right? You see the sellers try to push price lower by breaking out this low, and then it rally, broke below this low over here, tried to rally, broke this one over here, broke this low, and tried to rally. So you can see that each time it tries to break the low, but it didn't really gain much distance lower compared to this, right? You break this low, you collapse so much. You break this low, you collapse this much. But the recent times it broke the low, right? You can see that it didn't really go that far anymore. So what I'm trying to see here on this time frame is to see that the sellers exhausting themselves. So what I'm looking for is for the price to rally higher, right? Then the sellers come in, right, to push price lower. And this candle over here, right, should be pretty small, right? Because if they are large, right, having strong momentum like this, it's telling me that all the sellers are still in control. So I want to see preferably very small bodied candles, right? And after which, right, what you have is pretty much a neckline, something like this, right? So you have the sellers trying to push price lower, couldn't, and finally price breaks out of it. So this is very much a setup that I would want to trade, right? If it happens, right? So some of you may call this an inverse head and shoulders pattern, or along the lines, right? But basically this is the story I'm trying to see the sellers exhaust themselves, right? And then the bulls take control and break out this above this neckline or area of resistance, right? But again, right, I'm trading the daily time frame, right, this area of support, but just fine-tuning the entry on this 1 hour time frame. So it may be a little bit more work, but it helps with my trading in terms of my win rate. So again, this is a personal preference, right? I'm not saying that you can't trade of this candle pattern over here. It's really, up to you. Some traders are fine with, pin bar engulfing pattern. Some traders would wait for a breakout on the lower time frame. So I guess the key thing is, you have to know what is your entry trigger, right? So what is your entry trigger? So trigger is the thing that gets you into the trade, right? It's not about the trend, it's not about your support resistance, but rather what is the thing that is going to trigger you to put on the trade, right? Maybe a break of a high of a low, right? Maybe moving average crossover, and etc. So you have to define yourself. What is your entry trigger, right? So for me personally, I have about 3 entry trigger that I use. So it's best if you ask me to have more than one, because sometimes if you only have one entry trigger, for example, you only trade the pin bar, right? So often what's going to happen is that the market is not going to give you this specific trigger you're looking for. It may come in another variation of it. And if you're so focused on this particular trigger only, you're going to find yourself missing a lot of moves in the market. Right? So I was once, in this scenario myself, right? I was only waiting for this specific trigger, and I find that I miss a lot of moves in the market. So what's important to understand is to learn the variations of the particular trigger that you have, right? What are the other variations that could potentially occur, right? So, jot it down, right? Watch it, test it out, and from then on you have so-called different tools to actually help you trade the markets and to trigger your entry. I think this is really very important. Okay, so have a few triggers that you know of that will put you into a trade, and not just rely on one specific trigger, right? Because as I've said, right, if you just do it, you tend to miss moves in the market because you're just so fixated on that fixed little that particular pattern. Okay, so yeah, so this, if I do get into this trade, right, from a swing trading standpoint, right, I just want to share with you where it's an area that you want to look out for, right? So if my trigger gets triggered, right, you see that over here, you pretty much have a downward trend line over here. So this is pretty much where you can expect sellers to come in to push price lower. So if I do get triggered, right, my stop loss will be below this low over here, right? Thinking that since the market have taken out this low over here, right, traders who put their stop loss below this low has been taken out. So I'm pretty much more comfortable placing below this low right here over here, right? So if I get triggered, right, the market would say, if it goes in my favor, right, I'll be looking to bail out, right, somewhere around here, just below this downward trend line, right? Because on top of it, you have also this what you call a previous support, right? Previous support turn resistance. So it's somewhere between this area. I would expect sellers to come in once again. So from a swing trading standpoint, I'm just looking to take one swing in this market. All right. Okay, so this is for the 30-year Treasury bond. Another market I want to share with you, which I believe is pretty insightful, is again dollar Mexican. All right, if you look at this over here, you see this market is somewhat also respecting the area between the 20-50 period moving average. In fact, it's been respecting for the 20 for quite a while. Then it broke lower, right? Traded higher, came back in this area once again, and then it traded higher. So right now, what I'm seeing is that price is slowly coming back towards the 20 period moving average, right? See, this is somewhat a retracement occurring. So on the daily time frame, again, same thing. You want to identify your support resistance area. So I would say it's a very important skill to be able to draw your SR levels well. All right, this is really important, right? So for what I'm saying, I think this is an area to take note of, right? This would be a potential, previous resistance, break out, come back, becomes what? Support, right? So this is an area you want to be paying attention to. All right, so this is the area I'll be looking at. So maybe I give you a box, right? It's pretty much visually understandable, right? So this is the area I'll be looking for to get long. Again, I don't just go long blindly on this area. I'll wait for my entry trigger, right? Entry trigger to get long. So as I've talked about earlier, right? You want to have a few entry trigger in your so-called toolkit, your toolbox. All right. So this is dollar Mexican, again, something to pay attention to. And depending how you want to manage this trade, if it's a swing trade, then I would say this could potentially be an area where sellers could come in, because if it comes down lower, you know that this is potentially would be a swing high. So if the price rallies over here, you may want to exit either partial position, full position. It's really depending on your trading plan, right? All I can share with you is the key levels I'm looking at, and where are potential areas that you may want to exit your trades, right? This would be another swing high, or this is it multi-year high? I'm not sure, that you want to look into. Yep, it's a multi-year high. So these are the two levels to pay attention to. So dollar Mexican is another one to keep a lookout on. All right. So yeah, that's all I have for you in this week's market analysis. Just two very straightforward, simple SR support resistance setup. So just don't forget, we have TradersFest next week, so we won't have our usual weekly market analysis. So with that, right, I will see you guys at the event. I'll put the link below to register if you haven't. And if you have any comments, any feedback, just let me know in the comment section below. With that, I wish you all good luck and good trading, and talk to you soon.